Walk through the tech districts of Berlin, London, or Amsterdam, and you'll find a massive cohort of Turkish developers, founders, and executives building global enterprises. Many of them want to go back, whether to be closer to family, enjoy the Mediterranean lifestyle, or set up local engineering hubs. The pull of reverse migration is strong. These individuals are high net worth individuals. When you operate at that level of success, deciding where to live means prioritizing capital preservation. Relocating a global business is a calculated financial strategy, where lifestyle benefits are secondary to long-term capital stability. There is one primary barrier keeping most of these founders abroad: the widespread assumption that going back leads to a severe financial penalty. The common fear is that bringing a profitable mobile app or software company back to Turkey will subject global earnings to high local income taxes. That hesitation relies on tax policies that have been significantly updated. Recent legislation has turned the perceived financial penalty of returning home into a strategic advantage for global founders. Turkey recently introduced specific tax incentives to encourage overseas residents and citizens to relocate their operations back to the country. To qualify, an individual must have lived outside of Turkey for at least the last 3 consecutive years. Additionally, the individual must not have been a registered Turkish taxpayer during that same 3-year window. Meeting these 2 specific requirements establishes the legal eligibility for the 20-year tax exemption. This legislation is engineered with a specific filter. It bypasses current residents to focus entirely on the return of proven global talent. The mechanic of this code splits revenue into 2 categories based strictly on where the money is earned. Foreign-sourced income and global earnings follow the first pathway. If you develop software for clients in Europe or manage an app monetized in the US, that revenue is classified here. The government applies a complete tax exemption to these global earnings for 20 years. While the exact legal mechanism, whether it is a full exemption or a heavy deduction, is being finalized, the net result for global income remains 0 tax. Standard local tax rates apply only to the second category, income generated strictly from operations within Turkey's borders. This system allows tech entrepreneurs to operate a global SaaS or gaming business from Turkey tax-free, paying local rates only on the small fraction of business conducted domestically. Beyond monthly revenue, the policy addresses long-term wealth preservation and legacy planning. Normally, the Turkish inheritance tax follows a sliding scale between 1% and 10%, depending on the value of the assets. Returning citizens who meet the eligibility criteria bypass this scale, securing a guaranteed flat 1% inheritance tax rate. A flat 1% rate preserves significantly more wealth for the next generation, positioning Turkey as a multi-generational wealth haven. For the global Turkish professional, returning home now pairs a personal choice with a mathematically superior wealth-building strategy.